Hey, a couple of questions. We're here to work, right?
Yeah, of course.
Why is responsible investing still essential, or has it ever been essential for meeting fiduciary obligations and delivering risk-adjusted returns in today's market?
All responsible investing is looking at how the world is changing and making sure those changes are incorporated in your portfolio. That's frankly all this whole story is all about. And the world is changing quite a bit. It's changing from a climate perspective where you have $2.1 trillion now going into low carbon investments every year. $2.1 trillion in the real economy every year going into low carbon and increasing by 10 to 15% per year. You're seeing huge changes, of course, in weather patterns with increased extreme weather events. And all of that is changing how companies operate, the solutions that companies provide, and so on and so forth. On the social side, you're seeing a fundamental shift in labor all around the world, thanks to technology, thanks to changing labor practices. And on the governance side, we're seeing the way that companies are situating themselves for long-term decision making is changing because the world has changed. So all responsible investing is our responsibility to understand that the real economy is shifting
Hmm.
and we need to make sure our portfolios adjust to that reality. And so for that reason, it is absolutely essential for us to be considering all of these factors, sustainability, ESG factors, when we make investment decisions.
All right, that's clear and extremely convincing.
Good.
How do sustainability and governance factors influence valuation and portfolio resilience, especially amid technological, regulatory, and societal shifts?
All right. Well, let's just talk about valuations. All valuations are is market expectations of the future earnings of a business.
Hmm.
That's all it is. And so sustainability is about a company being able to survive and thrive over the long term, which means that a company is able to sell the goods and services that are needed not just for tomorrow or the year after, but in year 5, in year 10, in year 15. And so if a company is selling the goods and services that are needed for the world in years 5, 10, 15 from now,
Hmm.
that should be reflected in the valuations of those businesses. That's all it is. And so it shouldn't be a surprise that companies that are selling goods, that are goods and services for the economy of the future, which is a low carbon, technology enabled economy, those companies are trading at massive valuations
Hmm.
versus companies that are in the old economy, which are serving oil and gas needs, coal needs. Now, by the way, oil, gas, and coal is still needed in the world today, which is why those businesses have significant earnings, but their valuation isn't very high because the market is saying, we don't know if these businesses will be needed
Hmm.
10, 15, 20 years from now. Look, at the end of the day, what you know and what I know and what every market participant knows is that all a stock price is the net present value of its future earnings.
Hmm.
That's all it is. And by the way, 80% of a company's value is what happens from year 10 into infinity. It's the terminal value of a business. And that's what sustainability is about. That's what sustainable investing is about. And I just put out a piece in Institutional Investor making this argument very clearly that for this space to thrive, what we all should be focused on, the 2,000 people who are here, is the terminal value of businesses. What happens in years 11, 12, 13,
Hmm.
14, 15?
Yeah.
And believe you me, that is all low carbon. That is all technology. It's all the things that we all care about because that's the direction of the world.
All right. Okay. Very clear. And thanks for taking me back to my university years
Yes,
when
exactly.
NPVing was everybody's
That's
nightmare,
that's
right?
right, exactly. Now there's AI for it, so
That's true.
uh,
Has the case for responsible investing? So why is it wise to direct your investments into long-termism and
yes.
into what we call responsible investing? Has it ever gone away? Will it ever go away?
Well, look, I'll be honest with you. I think the sustainable investing crowd has made many mistakes over the last few years.
Okay.
And it is because of those mistakes that there is even a question like the one that you ask. We've over-focused on disclosures. We over-focused on industry associations. We over-focus on proselytizing. And we didn't spend enough time thinking about technology, thinking about real economy policy, and thinking about how business models are shifting to respond to the needs of the economy in years 5, 10, 15 from now. So if responsible investing is defined as a world of sustainability disclosures and 400-page sustainability reports and
Yep.
writing a bunch of things for regulators in different parts of the world, I won't name specific ones or specific regions,
Yeah.
then yeah, this space has a real problem.
Yeah.
But if we define this very clearly as what happens in the long-term earnings trajectories of different businesses, then this space becomes reintegrated with the capital markets as they are. And so if you have that vision of this space, I think we have a very, very exciting future.
All right. Aniket, last but not least, one of my favorite moments of today
Yeah.
was when Professor Ioannis Ioannou told that whenever he's in front of a crowd of investors,
Yeah.
he asks them, what bet do you want to take?
Okay.
Do you want to put your money in nature-based solutions
Yep.
that is clearly under-resourced
Yep.
and underfunded?
Yep.
Or do you want to put it in oil and gas
Right.
that we keep alive
Right.
by subsidies and all other interventions?
Yes.
Is that simplistic, or
No.
can you relate to that?
No, I totally relate to that. Look, he's exactly right. The beauty of markets is that they are a discounting mechanism. Financial markets are the way to make a decision today based on your view about where the world is going to go over the next 5, 10, 15, 20, 25 years. I would love to take the bet against someone who thinks we're going to double down on coal, oil, and gas. I would love to take that bet. Now, by the way, there could be 1 or 2 year volatilities. There could be price shocks. There could be wars. There could be that would drive up the cost of certain commodities, and so low carbon doesn't perform well. But on a 10-year, on a 20-year basis, there is absolutely no question of the direction of the world. So Professor Ioannou is correct, 100% correct. And for us, let's orient our thinking to that question. It's a real economy question. It's about the future earnings of businesses. It's about technology. And then the answer is very clear.
All right. Thank you.
Thank you very much, sir. Nice to meet you.
Nice to meet you.